Now we look at the surging past dues on credit card bills in the United States. The share of past dues on credit cards in the United States has jumped to the highest since 2012. Is this pointing to a financial crisis for US consumers? That's what our next report explores.
Among the many numbers suggesting new cracks in the U.S. economy, the proportion of overdue credit card bills hit a record high in data from the Federal Reserve Bank of Philadelphia dating back to 2012. In the March quarter, 2.6% of credit card bills were 60 days past due. This is an increase from the 1.1% level in 2021 when consumer spending were boosted by measures designed to combat the pandemic. Also reaching record highs since 2012 was the percentage of credit card bills that were 30 or 90 days past due. To combat inflation, economists have been keeping a close eye on consumer spending and other financial indicators as the Fed keeps rates at the highest in over a decade. Americans have already spent all of the extra money saved up during the pandemic. This means consumers, particularly those with lower incomes, might not be able to continue paying high interest rates. The data used to create the credit card series by the Philadelphia Fed came from the biggest banks in the nation. Consumer demand was stifled by the high cost of housing and increased mortgage rates. High interest rates are a double whammy for the consumers as inflation has also hit their wallets significantly. The Fed's hands have been forced to keep the rate high to combat more than decades-high inflation. With geopolitical tensions showing no signs of abating, inflation still remains a threat. The International Monetary Fund, in its latest projection, said rising prices pressures are the biggest risk to the global economy. The situation in the U.S., based on the latest findings of consumer financial conditions, suggests the worst is not over yet. While the Fed is widely expected to start its rate cuts in September, it will take longer for that to cascade to consumers. Is this causing permanent damage to the economy? The central bank's inability to control inflation is weighing on consumers in the world's largest economy. The U.S. elections in November add another dimension to the debate. Market volatility will weigh on the Fed's decision in the run-up to the elections. Can consumers bear the burden of high interest rates for any longer? Should the Fed take responsibility for the financial mess? This puts the spotlight on accountability for independent central banks who have failed consumers all over the world. Business Bureau Report, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.